Hi everyone, in this video I will talk about the candlestick patterns that I usually use to find entry points with best win rate. You should notice that I don't talk about the candlestick patterns that I use everywhere. I only guide the candlestick pattern that I discovered during my experience. I use them a lot and they are really effective. Don't forget to subscribe and press the bell button to know exactly when I'm publishing a new video. Okay, let's get started. Well, I have a bad memory when it came to candlestick pattern. For example, I couldn't remember the names of the reversal candlestick pattern in the textbook or on many websites like Morningstar or Evening Star. I only remembered engulfing pattern. The other candlestick patterns that I'm gonna share today is from my trading process and my experience. I named them myself to make it easier to remember and visualize. So if one of them is similar to the candlestick patterns you heard, don't take the name too seriously. Let's focus on how to trade them. Why do we need to know how to read candlestick? From a candlestick structure, we can read how strong buy or sell power are in a period of time. There are four main factors in a candlestick: opening price, closing price, highest price, and lowest price. The nature of the market is price line. If we consider the smallest unit of time is tick, you can see here, when price changes, it's a tick. So after many ticks, it will use lines to connect the price changes. It will look like this. It will oscillate up and down like this. And this is the price line. In the bigger picture, if this price line happens within 1 minute, it will form a 1 minute candlestick like this. This is opening price. This is closing price. We have candlestick body. Because the closing price is higher than the opening price, this is a bull candlestick. This is the lowest price, we have a lower shadow. This is the highest price, we have an upper shadow. And that's how 1 minute candlestick is formed. Similarly, when we shrink the 1 minute candlestick chart, we also see price lines like this. If this price line is on a period of time, for example, 1 hour or 2 hours, it will form a candlestick looking like this. This is opening price, also highest price. This is closing price, also lowest price. So this is a bad candlestick without shadow. We can see that there are candlesticks in a wave and there are waves in candlestick. So candlesticks and waves are related and complement each other. We can also look at candlesticks to understand buying and selling power. For example, here we have a 1 hour candlestick on 0 USD. This is opening price. This is closing price. This is the highest price and this is the lowest price. So the price will move from the opening price to the closing price. During the move, it will create the highest price and the lowest price, and it can go like this or like this. In any of those cases, we know that during the period of 1 hour candlestick, the buyer has pushed the price up, but then it was pushed back by seller and more than half of the previous buying power. This is candle reading. It comes from the essence of the problem. We don't have to try to memorize it. By candle reading, we can read the strength and weakness of any candlestick patterns. Now we apply candlestick reading to understand some popular reversal candlestick patterns. In this view, we have a bearish wave breaking the previous bottom. This candlestick shows strong bearish power. This is a potential selling zone. There is an engulfing pattern on the selling zone. If we consider this as a sell signal, we place an order here, put stop loss here, and put a take profit here. So the result will be, so my stop loss hit. Okay, let's read the candlestick again. The price goes up to the selling zone and then goes down, forming engulfing pattern. Because the buying power still remains, the price goes up again. These two candlesticks show consolidation, the war between buyers and sellers, and then the price break above, hit the stop loss. If we read carefully here, this engulfing pattern only showed the bearish entering the market one time. It didn't show the exhaustion of the previous buyer, no breakout structure, no reversal. When the price goes down, the buyer from the previous wave continue to push it up. In order to see the detail, we're gonna go to 1 minute candlestick chart. It will show the price moving in detail picture. This is 1 minute chart. We can see that the uptrend is steadying. And this is the engulfing pattern on 15 minute chart. Other candlestick patterns you can see on the screen. The price only goes up and down one time. They didn't show the strength of the bearish. These candlestick patterns only show the weakness of the bullish. They are not good reversal entries. Now we're gonna go through some strong candlestick patterns that you can use as a buying or selling entry. It's named bear candlestick pattern. From the name, you can imagine that it has many shadows. In order to be a strong pattern, it should have at least 3 shadows. The longer shadow, the stronger rejection. In this example, we can see that the price goes up, pull back, continue to goes up, and then it created a buying zone here. When the price came back to the buying zone, there are 5 long shadow candlesticks. It shows that the bearish is failed many times to push the buy down deeper. Here we can make an entry at the 4th candle after the previous 3 long shadow candle. And the 4th candle is also the candle that breaking above the 2 previous candles. Here is another example. We can see a downtrend here. The price make a downtrend structure. It makes lower highs and lower lows, and then create a selling zone here. After that, the price pull back and create many long shadow candlesticks. So what do they tell? It shows that the price went up and tried to break the selling zone, but fell and then being pushed back down. Here we have some support factor like the downtrend and the selling zone. It creates a good selling zone. Price pull back to the selling zone. The bear candlestick pattern appeared. And this is a good signal for us to prepare for a selling order. Besides, you not only use it to find good entry, but also use it to be a take profit signal. If you have a selling order here, when the pattern appears on the buying zone, you can close the order. The next pattern is the second engulfing pattern. This pattern has 2 top or 2 bottom, with the second is engulfing pattern. We don't make an order at the first engulfing. We only make an order at the second engulfing, at the second top or the second bottom. In this example, we can see that the price goes up, pull back, and then goes up, create a buying zone. We don't make an order at the first bottom. When the second bottom is engulfing pattern, we place an order. Here, similarly, we don't enter this bottom. We will enter at the second bottom with engulfing pattern. So what is the psychology here of the market? When the sellers are selling, If we place an order at the first bottom, the selling power still remains. The price can pull back and then continue to break the first bottom, creating a downtrend structure. When the engulfing pattern appeared on the second bottom, it got better because the bearish fell 2 times, and there's a signal that the bullish joined the market. It is also supported by the previous bullish wave. It creates a perfect buying zone. You can place an order right after the engulfing candle is closed and place a stop loss order below the engulfing pattern. In this example, I use 4-hour time frame. From the beginning of the video, I use many types of time frame, many types of market like Forex, stock. It doesn't matter the type of market or the time frame. All the method I share is built from the nature of the market, buying and selling. If only a market has chart, the methods can be applied. So you can answer the question, which method is suitable for which market or which time frame. This is an example of bearish case. We have a bearish wave creating a selling zone here. When the price pulls back, it creates the first top. The seller pushed the price down, but because of the bullish wave, the price is pushed up again. After that, the seller pushed the price down, creating engulfing pattern at the second top. At this time, the buyer failed to go higher 2 times. The second engulfing shows a strong momentum, so we can place an order here after this engulfing is closed. Stop loss above the engulfing pattern or above this level. That is an example of selling order. Don't forget to leave the comment below the topic that you want me to talk about. Now see you in the next video.